What's up, everyone? Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And we are back again. Memo, thanks for letting me and Brian do the show together last week. Appreciate that. How are you doing?
I'm doing much better.
Yeah, you.
And I'm glad that everybody sees me much better because I'm telling you, last week, Friday, my nose was running.
Hey, that was
one of those.
That was
so
a rough
go
day,
catch
huh?
it, right? Oh, yeah. I had the freaking paper towels in my nose, and, something had to stop it, clog it up.
Tell the story about FaceTiming with your client for the first time. And
it's crazy. So they're signing loan documents, and they didn't know that, hey, where's my wire instructions? Because I asked them, they're signing in Alabama, and they're like, well, where am I signing? They didn't give them the proper instructions what it was. The notary. And so next thing you know, he's FaceTiming me. Mind you, I've known this person since 2015, and I didn't know I had these two things in my nose,
you
right?
Forgot.
To plug. I totally did. And then when I opened the FaceTime, he's like, whoa, he started laughing. I'm like, whoa, oh, dang. Because, your picture comes out really small. And I'm looking at him like, whoa. No, I can't do that. I just don't want to.
I worked hard on this all day.
Yeah.
Yeah, so sorry about that.
This nose ain't helping me out, so you have to deal with it while we talk about your signing.
Sometimes when it's just there and you get used to it, it's like you just leave it.
Here's the thing. Real life happens outside of this room
really
and off camera. Real life is happening.
I just don't know that much people are going to put tissue papers up their nose and just leave it.
No, I do. You know what? Hey, listen. Sometimes you just got to do what you got to do, and people understand that. That's the coolest thing about our clients, too, is they're not all like stuffy and stuck up like that. So
yeah,
they're cool
true
people.
True family.
So today we got a couple things to talk about, especially regarding houses, house prices, inventory, concessions. Man, there's like a lot happening in real estate, and I shared a graph with you guys offline about how, in the entire economy, the real estate section is real estate and related housing is the largest sector of the economy, and number two is healthcare.
Yeah,
and
really,
and so. And they're like number 1 and 2, and the 3 is like a distant third. So when it comes to this kind of stuff, like I know we joke and we have our opinions and hot takes and stuff like that, but when it really comes down to it, these are the things that are really affecting people at the personal level, which is in neighborhoods and cities and counties, states, and then our whole country. So today we're going to talk a lot about that kind of stuff, and we're going to start with the first thing here, which is from Housing Wire. Nearly half of home sellers are offering concessions. So now this is like kind of a snapshot from Housing Wire that like half are, they said half. It's more like 44%. Like that's a huge roundup, by the way, right?
Yeah.
44%. That's nearly half Americans. Now this is in January through March, so it is in the recent future. I guess, do you think that if this is the rate we're at now, do you think that is likely to continue into the new year for the rest of the year?
Yes, I believe so. And you know what? Not that I believe so. I know so because we're starting to see the inventory growing. We're actually currently, I just saw that from Alta's research. It came out. We have 17,000 homes available in our current market.
Wait.
719.
719,000.
719,000 available homes.
Got it. Okay.
And so you guys remember that we were actually last year, we were talking about like, what do you think, how many homes are we going to have the following year? Do you think we're going to reach that million mark where it's going to be the normalcy, And we haven't hit that yet because mainly we're always hitting between that 10 to 13% of more inventory available on an annual basis. If we have more than that, it's just like something's going on.
Too much, yeah.
It's too much, right? But that's the norm. So the trend has been, we've been following that trend for the last year. And so we're starting to see more availability, more options for home buyers.
Yeah. Brian, how about you? What's happening on the front lines, man?
I feel like it depends where you're at and what city, what place you're at, because I feel that if there's not enough inventory coming, houses are going to stay on the market longer, and that's going to prompt sellers to want to give more credits. But on the other hand, if there's places that there's more inventory, there's a lot more, traction, I feel those places are going to ease up on the credits as more inventory rolls out. And I'm hopeful that more inventory will come out this year towards the summer. So
last week, Brian, we were talking about how, for every seller, there's a buyer, and for every buyer demand, that we're looking for someone to sell. And, so I think that we're at this point where people who did not sell before are looking to sell now because maybe they're sensing that we're at a flattening of the pricing. Yeah. And when this kind of thing comes out, it kind of corroborates what we've been suspecting and what the data is kind of showing us. But again, the data is always open to interpretation as well because it's localized. What happens in Chula Vista isn't what's happening in all San Diego What's happening in San Diego isn't what's happening in all of California. Certainly what's happening in California isn't happening in the rest of the country. So so you have to kind of like think of that in the layers. But we were talking last week about how like, this might be a really good time for both parties because where the pricing is kind of, let's say, stabilized and in some places kind of coming down a little bit and then concessions come to play, that gives buyers the opportunity to get in like we were talking about. And I'm going to use your most recent case study. We just put that out in the market last week, and the Salazar brothers, right? Yeah. They saved how much? $27,920, and that's amazing. Like that, those deals are there, and this kind of thing is likely to continue as sellers are looking for a place to go to. They're looking for a destination, and later in this, I'm going to show you where they're going. Yeah. But this is absolutely likely to continue, in my opinion.
Yeah, no, absolutely.
I feel with this information and knowing this, if you're in the current market, I feel don't be afraid to ask for credits or ask for negotiations. And I think usually you're accustomed to you asking for closing cost credits, but what I've recently seen is that these credits are getting very creative as far as covering my insurance, covering my HOA payments for a couple of months or even a year. So so the negotiations are there. You just have to strategically see how they're going to be able to play out in your favor. But I think the options of asking for credits is definitely something that is very empowering right now for buyers, and those opportunities are being shown as we see right here in this article right now.
Yeah. I like that. It states here in Seattle, 71.3% of sellers offered concessions in first quarter of 2025. That's just crazy.
Yeah, that's a lot.
It is. I have an actual example. We just closed one in Tennessee. Luckily now we're approved in 47 states, which is phenomenal. But in Tennessee, the purchase price was $715,000, and it is a VA. He was actually stationed here in Imperial Beach and left to Tennessee. Start his new life. I'm close to retirement. That's where I want to be. And so he purchased a home, $715,000, and got 4% seller concessions.
Wow.
That translates
That's
to
a lot.
what?
That's like $28,000.
Yeah, there you go.
Yeah.
So
a little over $28,000.
Which is cool because he had gone in and put a $7,100 earnest money deposit. He got that back and some.
Dang.
Yeah, because you're able to get up to $500 on top of that, whatever you put in. You can't make more than that with VA.
Right.
But he got all that money back, and so we're able, just like Brian mentioned, you can have them pay for certain things, right? Like your HOA, or even add more to taxes, because we couldn't eat it all up.
Yeah. Sorry, go ahead. Finish.
And so, that allowed us also to give him an interest rate of 5.75, which was a lot more favorable for him.
Oh, wow. That's
phenomenal.
well under 6.
Because they were, the market was doing pretty well at that point in time. So the point being is, take advantage of these times. Every state is going to have its different opportunities. The other thing that would happen, this home was a custom home. The value came in at $800,000.
Oh, shoot.
Yeah, exactly.
So it was under market, and he got 4% in concessions?
That's correct.
That's crazy.
So when I saw those numbers, I'm like, this is great. This is a great buy.
Wow.
So these, like Brian said, every state, every city's going to be, it's going to have its own, advantages and disadvantages, etc.
Okay, I have a question, right? This is something we talked about last week. So, Will, I know you don't know I'm going to ask this. Memo, how prepared was that buyer when he started making offers?
Oh, yeah.
That's a good question.
Well prepared. He was already, his decision was already made, so we already had all his information 2 months prior to.
Okay, so last week we were talking about how there's these killers out in the market, man, and like that's who if you're a buyer, that's who you're competing against. Yeah. You're competing with people who have their crap together, they got the documents in, they're already DU approved, and they're out shopping. So when you get an offer and that realtor that's listing that house got this stack of offers, they're looking at who's most prepared. Sometimes there's a cross-qualification involved. So we had a whole talk about this last week, and it was to prove that point. Like the people that are getting in right now, they're well-prepared. They're working in advance. They're patient with the process. But when they find the right place, they end up getting the deal, which you're talking about right now. The guy got an under market value, and he got a concession because he was ready. I pretty much figured that was the case. Yeah. I was like, I'm going to take a shot in the dark. This is going to work out or it's not.
Like to your example, you don't just get pre-approved 1 week for another and then that happens. Now there's a slim chance that it can happen, but most scenarios it's not going to be like that. I've seen it's a 3, 6, sometimes 9 months, depending on what you're looking for, the price range, the area that you're looking for. So all these things play a part. One of the things I did want to advise, if you're a buyer and you're in that room of, you don't know if you could take that payment on, you don't know if you're going to be able to afford it, instead of asking for a price reduction, negotiate credits to buy your rate down, pay something down that's going to alleviate monthly payments in the future, but don't ask for that seller to bring down the price, because on the contrary, that might not help you out as much as you think. Buying down the rate or strategically using seller credits could put you in a better monthly payment and in a better position down the line to be able to, get into that property.
Yeah, it's kind of like levers. You can push this one a little bit that way, this one a little bit that way, and maybe you can get the kind of the best of both worlds type of situation. And especially if it's already appraising at that price, then go with that and do the concession part, because you can use that to apply to other things.
Yeah,
so that's super good.
Knowledge is power when applied.
Yeah, absolutely.
Right? And so that's what we want to stick with. And in this case, he put himself in the most favorable position possible, because one, his realtor partner, right? And I say partner because we're all partners in this to try to get our client into what they need, what they want to get into. And so he negotiated very well.
Yeah.
It was a really good negotiation. Then obviously he comes with us, and we're going to get him the lowest rate possible now, because we understand that the sellers are, helping out with this. And so a lot of times people don't understand the sellers put themselves in that position because they want the higher sales comparables in the area still. So if they have a price reduction, they don't offer that, then their property is just going to stay stagnant.
Yeah.
That's when we have to do that real price reduction.
Right.
And so in this case, the seller's like, wait a minute, I think my home is probably worth that 800, but I'm willing to take this and give that to get me to that next stage of where I need to be at. So
yeah, and it brings up a good point that there is enough equity for negotiations to make sense. And if you know that information and you're out shopping, utilize that to your advantage.
That's right.
So there's three cool. I'm going to say cool. Man, I'm such a dork. Dang it! I shouldn't have said that. I shouldn't have said I got three cool things. I got 3 pieces of data I want to share real quick. I said it's cool. Dang it! I should. We're not going to cut that out. All right.
Nerd.
The first one. 21% of homes sold in Q1 2025 went for less than asking price and included a seller concession. 16.2% involved a price cut and concession, and 9.9% involved a price cut, concession, and a sale price below the initial asking price. So these are all kind of like, I shouldn't say flashing red lights. These are all like indicators of what's actually happening in the market, that if you're a buyer, you can be looking for these things. It's actually happening. And you could argue, oh, well, that's not that statistically significant. Well, I don't know. Tell the 9.9%, 16.2, or 21% of people that it's not. Okay? So this could be your situation right here.
Yeah, absolutely. Absolutely.
All right, let's move on, guys. Next thing here. Well, sorry, is there anything else on concessions?
No. I think it's a just...
Don't be afraid to ask.
Okay, well, we're moving on quickly because we're going to talk about affordability, which is no one's favorite topic. It's just a thing. And so this article from Realtor.com ranked the top 10 best and top 10 worst states, best states and worst states for home building and affordability. And I like that they put home building and affordability together. Here's why. We've been talking for a number of months now about, well, what if they do new zoning? They loosen up the restrictions on certain zoning to make more federal land available to build. What if we help incentivize the builders to make more inventory? What are all those levers that have to be controlled or manipulated in order to create new product on the market? And this just comes right out with it, for better or for worse, man. There's some states that are killing it, and then there's the dogs on the list, which includes our own California. Let's see the grid here. A, B, C, D, E,
the West.
F. F for California. So F for you, California. F on Rhode Island. F on Massachusetts. F on New York. F on Hawaii. F on Connecticut. F on Oregon. Wow, that's terrible. That's 7 of the bottom 10. They F's. Not even D minus, guys. I got a D in college once. That was terrible. But dude, 7 out of 10 got Fs. This is rough. You want to know about the D, don't you?
No, I was just gonna say, yeah, it was bad. You got a D. I'm like, I'm gonna just stay quiet. I'm not gonna tell my.
Real bad. Hey, I got a D in college. Oh my gosh, it was terrible.
I know.
So here's the deal, guys. What this report is saying that sorry, I almost went to the wrong one. What we're seeing here is that there's states that are really getting it right when it comes to letting builders build and helping people get into affordable housing. Now, generally speaking, every state's going to have differences in what they allow, what kind of property types, and there's going to be a larger segment that have single-family residences versus townhomes versus condos. But in general, there seems to be room for improvement everywhere across every metric, because we have so much lack of housing. This is saying, I think we're 4 million short. I know we've been tossed around the number of 6 in previous episodes. Yeah. This is saying like we're about 4 million short. That's still a ton. That's a lot.
It's a lot.
Yeah. So what I took from this article, and I think what people can apply if you're in the market is if you're exploring to move out of state, South and Midwest is killing it as far as affordability. They're constantly building, or they're building more than other states. And therefore, if that's what you're looking for as far as affordability, those are going to be the areas here in the United States that's going to give you that best affordability chance. Now, on the flip side is it's also very highly crucial to understand the impact of zoning and zoning policies, because that's the reason why things are expensive in your certain city, certain municipality, because of the fact that those simple policies aren't able to be moved in the way that is going to benefit builders, people that want to buy in those areas. So understanding that, it's going to let you know right off the bat why your state is very expensive. So you see here in California, we're one of the most, scrutinized, one of the most regulated, one of the most, zoning policies out of maybe all states. So knowing that information, if you want to go through all those roadblocks, that information is available to you. And I really like how they categorize it in A, B, C, D, because that's how everyday people learn,
And F.
If it's an F, that's bad, So I think utilizing this information, if you're unaware of what states outside of your state look like, this is going to give you a really good reference point to see if that's something that you want to, explore in another state.
No, that's pretty cool because, even though I'm here, I flunk math and I flunk a lot of other stuff, I want to stay out of the flunking state too. Exactly. But unfortunately, I'm here to stay for a long period of time. The cool thing about it is, for a lot of other people that don't understand the whole A's and B's, always stick with an A. Does good things, and this actually will put you in that best state, right? So I love that South Carolina was one of the highest ranking ones. Texas is right there. I didn't think about that, but they do have a lot of land, and you do hear that their zoning laws and restrictions are not that restrictive, and they do offer a lot more incentives for builders to be able to build. And so I actually have a contractor friend out there, and he's like, man, I can build a house like in 3-4 months. I'm like, wow, here it takes you 2 years.
That's crazy.
It feels like 3-4 years.
Like he's like, we can build quick. So that gives me an understanding and a clearer view as to why it's in the A,
Yeah.
So it is pretty cool. We do need to change that so that we can make things a lot more affordable, because you can go to Texas, buy a very nice home between $300,000 to $500,000. Which is phenomenal,
Yeah. Can I say something about Texas?
Absolutely.
So one of the things when I was reading this, I was like, holy crap, that's crazy. So Texas accounted for 15.3% of the national residential construction permits last year. So mathematically, we have 50 states. So if they all had the same, then we'd have every state would have 2%. Texas has 15% of the entire permits for the entire nation. And so I think the next in line was like 9% or something like that. There was like a 6% percentage gap from Texas's amount of permits filed to the number 2 state permits filed.
That's a lot.
Like they're just over there. They're just like this juggernaut right now for building. But hey, guess what? They have the demand too. Like people are going for a variety of reasons. But you've seen big industry go there too. How many big companies left California in 21, 2, 3, or 4 and went to Texas, like relocated their entire employee base to Texas?
Definitely growing. So, we do see that growth over there. I had the client that we actually signed the final loan docs on Friday. She's traveling back to San Diego, and she took a road trip and is going through Dallas. And she's like, I don't remember seeing it like this. It is crazy. Traffic and everything is just, it's just like, whoa.
Yeah.
Same. We back in October when Jen and I got stuck in Dallas overnight. The next morning we're driving to the airport super early in the morning. One of our clients who lives out there now took me to the airport. One of our friends, Jesse, and at like 5:30 in the morning, the freeway was jam packed. And they had just moved there not too long earlier, and so for a San Diegan to go to Dallas, like, actually this isn't that bad. I'm like, but it wasn't this way. Like a while ago, it wasn't this way. And then I was most recently in Houston, same thing. To go like 20 miles in the morning from like the little suburb we were staying at off site to get to the conference center, it took us 45 minutes to go 19.8 miles. And it's like, oh, this is some San Diego type traffic we got going on right now. So
LA.
So it's happening.
The good thing about this being that it's in these areas, it makes things affordable. It makes it with the median income. will allow that person to purchase a home, which is the beauty of it. So I applaud them. I applaud these states that are looking out for the people who are their residents that are in that state.
Yeah, no, I like this a lot. And look, I hate being the bottom of the barrel. Like I hate that California, because California is so wonderful, right? There's so many things about our state that I really love, and I like so many aspects of it. But at the same time, it's like, man, it is punishing working it out. If you're not like making it, right, it can be punishing. And I know there's a lot of people that are trying to make it here or so close to making it or are making it all, but they really aspire to. Like there's a way to make your way through all this regardless of the state's grade of F, okay?
Yeah. No, it's crazy.
Just think you could be in another F state, like, I'm going to talk trash real quick.
No.
You could be in Oregon. Sorry, Oregon. I think Oregon's beautiful. Yeah. I'm just picking on you. Sorry, Oregonians listening.
So here, in the medium, I wanted to share this. The medium list price in Iowa is $294,600. I wanted to just see, what do you get there? Like, what can you buy in that price?
A Lamborghini Urus.
Right. Well, that's that.
That's the same price, right?
Yeah. So what I ended up doing is I calculated something at 6.625 interest rate with 5% down, which is $14,720 down payment. The estimated payment was $1,790.82. How crazy is that?
That's actually lower than the Urus payment.
Yeah, no, I most definitely.
And you can't live in the Urus.
Hey, I'm stuck on the Lamborghini.
Yeah, and then
Lamborghini still makes more sense.
And so what's crazy about that is the home size too. You can get that, depending on where you're at. Again, you brought up a good point earlier, Brian. It just depends where you're at, but you can get anywhere from a 3 to 4 bedroom, 2 to 3 bath, and the square footage is from 1,100 to 1,900 square feet, more or less.
That's good. No, that's really good.
That's not bad, because when I bought my first home here in San Diego, it was a 3 bedroom, 2 bath, 1,500 and change square feet, and that was out for $242,000.
Did you say 242?
242, and we're talking about 25 years ago.
Yeah, I know. That's nuts, man.
That's
nuts.
So
that's a good example.
Also, since we're in examples, I did another one, because here we go, South Carolina.
I'm just going to leave. You just take over the show. Go.
That's it. That's what I'm doing. And so this one was for $354,429. That's the medium sales price. And check this out. So at 6.625, I used the same interest rate, 5% down, conventional, right? That's $17,722. And that's the down payment. And when I'm talking about 6.625 and I'm including the payment, that's just principal and interest. No taxes, no insurance, nothing like that. Just principal and interest.
Thank you for clarifying that.
The payment was $2,155.97.
Wow.
But check this out, the house. 3 to 5 bedrooms. And then it was 2 to 3 bedrooms. 3 to 5 bedrooms, 2 to 3 baths, 1,500 to 2,700 square feet.
Dude, that's a real good size house. For $2,100 a month?
That's it.
Yeah, I'll take 2.
I feel what people could take from this is that if you know that you're in California and maybe you want to get into a house and you have to have that real talk with yourself and say, well, maybe it's not going to work out in California. There is options outside of California. Now, it doesn't mean you forever have to leave, but there is affordability in other places that that are going to give you a better opportunity to save up some more money and then be able to utilize that as a vehicle, then come back to the to the state that you want to live in.
Yeah.
Wow, this is, as much as like it hurts to hear the bottom of the list stuff. I'm optimistic about some of the stuff changing because of the pressures that are happening. Economically, part of that, policy wise, is the other. And again, remember, and they didn't bring it up in here, but we've talked about it before. Like these housing agencies, they are tasked with coming up with solutions about inventory and affordability.
Yeah.
So, whether they like it or not, there's going to be continued pressure until the dam breaks, as they say, and we actually have both those things accomplished. I don't see the ego of our current administration having it another way, if I could put it that way. Does that make sense?
That makes perfect
sense.
So
I think it's going to get better, even if economically things are wobbly for a little bit because of the tariffs and all that other stuff. I think that because of the pressure point put on and kind of they're charged with, I think they have to come through. I don't think they have an option not to come through.
Absolutely.
And go back to what I said a while ago. If housing and related industries are the largest sector of the economy, they have no other choice. Yeah. They absolutely must. So I'm confident about that.
Yeah.
Okay, guys, we're here over at, I don't know, who did I get this from? Anyways, existing home sales fall to slowest pace since 2009 amid rising costs. Now, this does not freak me out the way that the article would want you to if you just read the headline.
Yeah.
Because the entire financial system was different in 2009 than the way it is now. Our entire qualifications that preceded 2009 are different than the way they are now. So the whole existing home sales follow the slowest pace. It's pace, not volume. Yes, volume, pace, run down the street hand in hand. But if we have more inventory and we have more closing cost credit like we talked about, then I think we're going to actually see a more normalized spring and summer. And then what's going to happen, you get to the fall, oh, we've had the best spring and summer we've had in the last 5 years. Mark my words.
Yeah. You know what's crazy is when you read this article, as soon as I read the headline, I was like, we're going back there again? Like, whoa. But you know, the data doesn't predict that. If we're going into a recession, housing recession, in the way this article makes it seem, that would usually, like the 2008, it took about 5 years before we got there. That would mean that would take us all the way to like 2029, 2030 for us to really see that. Mm-hmm. So if people are looking like, hey, we're going to go into recession, I'm going to get the best price. The data doesn't show that. We have a strong labor market, you know, and that's why it is a healthy market that we have right now. Until we start seeing the unemployment rate go down, that's when we have to really consider these other facts.
You mean unemployment go up? Yeah.
Go up,
Yeah.
I'm sorry. Go up. And we say, yeah.
No, it's okay. And one of the things, and I'm jumping in here because if you go to the bottom and you see that last paragraph there, on here it says, with mortgage delinquencies at historical lows. That's part of the reason why. The whole lock-in effect that happened in 2020, 21, 22, and a little bit of 23, getting lower rates, and now we have equities that have gone up and then stayed up. Like, that's part of why there's no pending doom crash, because even if people do have a delinquency issue, if they have equity, they can still sell, which then the sale becomes a listing, which is inventory, which then there may be concessions in it if they have equity, and if they have to do a price reduction to get a buyer in, they'll do that, which now is exactly what we just led this whole show with, which is the environment of real estate is alive and working. It is not broken, as you might be led to
and
believe.
This is the most equity homeowners have ever had in their homes, ever. So it's not like then the other thing that we have to consider, the most homeowners have the lowest interest rate they've ever had.
Oh yeah, that chart is crazy.
Yeah, so when we were looking at that, people had between under 3%. It was like, I forget what the data was, but it was incredible to see that.
And even under 6%. I think it was like 85 or 90% of loans are under 6% or something like that. Or it was either 6 or 6.5. Like don't quote me on the stat, but it's some ridiculously high percentage at a historical good interest rate, like 6 or 6.5. All things considered, not in the last 5 years. I get it, but the people that are at 3, 3.5, 4, 4.5, 5, 5.5%, it's the majority of homeowners. It's not even close to being tilted in the opposite direction where this might lead you to want to go. I do want to talk about the amount of annualized inventory that they're referencing, though, because this, to me, they say it dropped. The annual seasonally adjusted sales volume dropped, but it's still 4.02 million. So annualized, what they're saying is that in 2025, we'll still see 4 million homes change hands this year. Which is 1 million a quarter. Which is a lot. I mean, so that's 333,000 per month. Okay.
It's because our norm is around 6 million. That's the norm.
Right.
You know, and so we're not hitting there. This is going to be the 4th consecutive year of the lowest home sales we've seen.
But it's higher than it was like at 2.5 million a couple years ago, right? So it's like, okay, we've come from 2.5 and the gutter. Now we crossed 3.5. We're at 4 million, which is healthy. Yes, current listings, like you were saying earlier, is like 758 or 719,000 of current listings. But our annualized volume, I think, is where I have my eye set on.
Correct.
And the evidence is all there based on your comments earlier. You brought up Texas. You were bringing in the South and the Midwest, and that's what you see here by region. So by region, the Northeast for existing home sales is an annual rate of 490,000. In the Midwest, the rate is 950,000. In the South, it's 1.8 million in the South. And then in the West, it's only 770,000. So I did the quick breakdown numbers-wise because I'm a nerd, right? So of our total 4 million expected this year, 12% come from the Northeast, 23% will come from the Midwest, 45% will come from the South. So nearly half of our sales this year are going to come from the South, and then only 19% from the West.
So what does this mean for buyers and sellers?
It means that if they want to be in the market, you need to get in the market. You need to get prepared. You need to be ready to strike when the iron's hot.
Thank you. So what I was going to mention is that I feel that this is a perfect runway for buyers that are prepared right, that are in there getting their reps. Because if we see properties, staying on the market for longer, those are all opportunities for you to negotiate, for you to get in there and get a deal that benefits you. So I think right now for buyers, if you're noticing this, storm right now, I think you could use it to your advantage to be able to snag a good deal, but only if you're in the game and you're actively window shopping or actively participating in submitting offers so that you can really get a test for the waters and see what you're up against. On the flip side, if you're a seller, price your house to this type of market. Don't get stuck in pricing of last year, the year before that, because that's the reason perhaps that your property's sticking on the market for longer. Yeah. I get it. You're emotionally attached to your property. You put a lot of sweat equity into it, but chances are that isn't going to be what pushes your house to a higher price point. So make sure you're making it enticing for the buyer, enticing for people that want to come and see and submit offers on your property. And how do you do this? By marketing it aggressively. And you might not want to hear this and you might take this the wrong way, but maybe giving yourself a runway to get that purchase price up is going to get you a lot more views and submitted offers than if you go high. And I feel that's just going to get you people to want to come down.
And here's another uncomfortable truth. When push comes to shove, you're going to do what you got to do to sell your house.
Yeah.
It's just the way it goes. And I don't mean you're going to get your arm bent by a buyer and you're going to have to, tap out. I'm saying that sometimes if you have a life situation happening, when the chips fall, you're going to end up doing what you got to do to get that place closed.
Just this week, I got a call from a listing agent, one of my buddies, Miguel. He's helping his dad sell this property. He's like, hey, we just did a price reduction. And on top of that, we're offering a year of HOA, and we can either bring the rate down or give buyers credit. So
I haven't heard the year of HOA thing before. Yeah. That's an interesting one.
Yeah, I've been working with some buyers, and I've been telling them, hey, HOA is above 500 in 2 months. You're 1,000 in. So if you're able to take some of those credits and apply them towards a few months or a year of HOA, that's going to save you just a few $100 in a monthly payment.
Yeah, I know the insurance thing was happening because of the premium increase that's been happening, or people not getting insured anyways, or just being so exorbitant it's hard to get. But I didn't know the HOA thing. That's a strong one. I can see that
I've
actually
recently been
increasing in popularity.
Yeah. I mean, Brian, you bring up a good point. You got to price your home right. I have a couple of clients here, the ones that were in Alabama, they had to sell their property there. They put their home in Alabama and literally sold in 4 days. I have another client that actually lives here in San Diego. They put their house on the market. It lasted 16 days, and that's what happens when you list the property at the right price. Things will happen, And so I also agree with you, Brian, because there's been times where I know myself personally, I felt like, damn, right in front of my father-in-laws that were selling his house, right? It was going for 1.3. And at that time, I thought the housing market's it can't be going up this quick. This is crazy. This is 2018. It's close to a 5,500 square foot home. And I'm like, but you know what? I don't need it. Hindsight is 40-40. I wish I would have got that, right?
Well, knowing what we know now and where we're at, the family grew.
Did you just say hindsight is 40-40?
Yeah, 40-40 for me. And I had to say that because that's what it is for me. It's a 40%.
I love you.
It's the best.
And so looking at that, like, man, I should have got into that. I should have. Then that was across the street. The neighbor to the left of them, that was going for $930 a year prior to.
I know.
And that was because the yard wasn't done. I know. But I went in there and looked at it. I'm like, I don't like the layout. I don't like this. But if I would have just took the shot, just would have gone with it, we could have done it easily, not a problem. And I would have been laughing all the way to the bank right now. And
yeah, what's that place at? 1.6 or something?
No,
the
one
at
2.4.
The one that was 990 or 930 or whatever.
The one across the street's 2.5.
Right. Okay.
It's 2.5.
The one to the left.
The one to the left, they ended up buying for the 9 and change. But they ended up putting in the ADU and all that stuff. So it's probably worth right now about the same.
Dang.
So it's just those little things. And
you just said those little things about $1 million purchase is now 2.5.
What I say is the little things about just sometimes if you're in that position, right? Like, I'm not saying you have to go buy right now. No, I'm not saying that. But if you're able and you're qualified to buy right now, like, really pay attention to those small little, crumbs of success there.
Yeah.
Like, this thing, it's going to level off. I know the tariffs and all that stuff is happening right now, and it's creating a lot of uncertainty out there. But that's when you want to take advantage of it. When people are selling, you're buying, and vice versa.
Yeah, I think this is the same kind of thing that was happening after the 08-09 collapse, right? And you said like about in 5 years, everyone started like kind of picking it back up again. So by 2011, those people were early, if you will. Yeah. Then the mass majority was like that 2013, 2014. I think you bought your place now at 2013, right?
Yeah, 2013.
Okay? 2013, and look at it now. Yeah. The difference is you skip forward to now. People are having that same kind of sentiment, but we haven't had the market drop. Yeah. So I think people that are going to lose out are still waiting for the market drop so that it affirms their sentiment. But what's happening that we talked about last week is that people that have that sentiment and going for it are actually locking in house prices, even if there's a little bit of price reduction, even if there's little concessions, they're getting in while everyone else who's still waiting for their sentiment to be confirmed. Exactly. And I think that if you're waiting for that dip, you might be on the outside looking in. I'm really sorry.
So I feel just as important as getting financially prepared right now, you also have to get mentally prepared. What I mean by that is we're naturally afraid of what we don't know. And what we don't know is when the market's going to crash. So everybody's in fear of that. But when you have fear for those types of situations, I think it's even more important to find the examples, find those success stories like you mentioned right now, lean into those successes that other people have, gone through by utilizing the data that's out there, examples of people that consistently do this and have proven ways that they've had success through bad markets. And I think right now there's a lot of, good mentors out there. There's a lot of people that can give that information, but it comes down to just, having an internal checklist. Are you able to afford this? Yes. Do you want to afford this? No. But does your financial means allow for you to do it? Yes. Then it's more of a personal problem in trying to get yourself to make the decision rather than can I or can I not? I feel you mask it behind the, I can't buy that right now. But if you look at your finances, you look at your pre-approval, I know you can afford it. You look at your savings, you have a good, amounts of savings. If you're that type of individual right now and it's just your uncertainty or you're not knowing of what's going to happen, continuously keep moving forward because, like they said, one foot behind the other, you only see what that light in front of you could show. It's going to happen, but not if you're not consistently taking those actions.
No, so true, man.
I like that.
So true.
Yeah, be in hot pursuit. I like that.
Yeah, be in hot pursuit.
Yeah. Well, guys, so we're going to continue the hot pursuit conversation because even though we're talking about this title, should you buy a house during a recession? Here's my. Can I rant up front?
Yeah.
You're like, don't you always? Yeah, thank you for filling in the blanks. Wow, man. I bet you and our Mad Libs would say the exact same thing. It's finishing each other's sentences. Okay, never mind. So we're not in a recession. A recession is not on the horizon. I think there's a lot of fear-mongering happening, and I'm going to call, yet again, bullshit, because back when there was a recession by 2 consecutive negative quarters of GDP in 2022, y'all said nothing. You said absolutely nothing. What you did is you changed the definition to mean something you wanted it to cover the administration's ass. So now let's talk about this article. So back in 2022, the quarter one GDP was negative 1.6. In 2022, the quarter two GDP was negative 0.9. No one called a recession. Everyone went to rush to cover, and you all tried to redefine what a recession is. And by saying it's not the traditional, but it is kind of the metric that everyone looks at. Yeah. And now we do not have one consecutive quarter of negative GDP, nor do we have 2, nor do we have 3, nor does it look like it's on the horizon, and you're already saying this. So I don't know what gives. Let's talk about whether people should buy a house during a recession or not, because I'm going to say you do it because you need to or want to, regardless of what the economy's red flashing warning signs are, because these people are not on your side. They're not on your side of telling you what you need to know to advance and take ground and take territory of the thing you're hoping to have. If they're willing to lie to you before and lie to you now, they're not on your side. Number one. Number two, if you want it, talk to Memo, talk to Brian, and then go get it done. Do you guys want to continue talking about this?
Honestly, I don't even know if I could say anything like that. Thank you guys so much for coming. Passionate. We'll see you guys next week.
See you next week.
Let's go to the 40-40, okay?
Okay.
We're going back to that.
Let's go.
But
hit me.
Absolutely. Of course, with all these headlines and everything that's going on with the whole, Jerome Powell getting fired, not getting fired, the whole tariffs with China, now that being put on pause, it just creates this whole this unbalance. You know, this uncertainty out there, the pressure on bonds, people not buying it, devaluation of our dollar, you know, it just brings concern. It just gets people on the fence like, oh God, if that was taking a foot forward, they're going to take 2 steps back now because they really want to get everything analyzed. And when you're reading this and not really looking at the data, one thing we were taught, right, Brian, is look at the data.
Yeah, look at the data.
The data will say everything.
I just recently started looking at it and my life changed.
Yes. And it does. It just creates this, okay, I see that. And you have to pay more attention, you know, even though before I did have investments, I wouldn't pay attention to it. But now that I'm trying to help my clients become investors, I want to pay more attention to the data. And because I'm also building and we're doing things, we also want to make sure that we understand that data to make a informative decision whether or not we move forward with that investment. Because everything matters. You have to pay attention to everything, you know. And so, you know, buying a home in certain areas, you have to learn to categorize it. Your A, B, C, and D, just like they did, like where the housing market is going, where they're building and stuff, like we talked about earlier. That's what you have to do also for your rental when you're building, when you're buying. You have to look at this, you know, what's going to happen down the future. Whether I buy this and keep my family in here, is it going to rent out if I decide to keep it? And what's the likelihood of that even renting? You know, obviously, if you're in like a C- area, it's going to be very difficult to do that. So you also want to make that higher expense to be in that B area, where now it makes it, okay, it's going to make it more lucrative for me. One, the appreciation is going to be there. Second, I have an exit strategy. If I want to keep it, I can rent it out. It's just going to make more sense. And the schools, I'm sure they're going to be a lot better.
Yeah.
You know? So
no, I definitely agree that we have to pay close attention to those small details because you are making that big investment. You could potentially, you know, make or break your life depending on where you choose to live. I think one of the things that is very important to just, you know, take from this as well is that can we control the way the economy is going to go? No, exactly. So don't even worry about, you know, what big economy is doing. Worry about what your economy is doing, what your life is like, you know, what you can control. If your job has steadiness, is there going to be, you know, opportunities for you to, you know, level up in that field? Or, you know, how is it that you're going to make yourself bulletproof to certain situations? And even though you don't have control over everything, at least you could plan for yourself, put yourself in a situation that, you know, it's going to allow you to win, utilizing all this data and information. Now, if you don't choose to do that, I mean, you're also setting yourself up to, you know, be a statistic of all this information that we're digesting as well.
On the wrong side of the stat?
Yeah, exactly. So it's like you have the ability to be able to guide these waters, whether you take that option or not. It's completely up to you.
Yeah.
But the one thing I know that I'm very certain on is that I can't control what Jerome Powell is going to go up and say. I can't control what Donald Trump is going to say out of his mouth, nor what the economy and the markets are going to do. What I can control is my energy, my habits, my way of spending, my budgeting. All those things will play a big part when things like this is happening in the big world. Your small world won't feel as small.
Great point.
So, you know, I know I started this off with like a heavy rant. My hair fell off and I'm sweating. But my concern is that this dissuades people from doing something that they should be doing for their life if they want to, because they're letting someone who doesn't know them, doesn't know their scenario, doesn't know their situation, weigh in on their mentality and behavior, what they should do. Now, if you're a mature person, I know this may not be your problem. But for some people, look, they get dissuaded by what they see and they read. So when things like this are shared and we're craftily moved to a new focus point and off of the thing we were being told for a long time, some people don't forget. And I'm pointing at myself. Like, I remember the word soft landing being used for a long time.
A long time.
Remember the word soft landing or the term soft landing?
Hard to forget.
Right? Remember easing in the labor market?
Yeah.
Remember that? How about securing price stability? All these things the Fed had said they needed to do and were going to do, and that was a rationale and reasoning for ticking up rates and then leaving rates. And then they conveniently, all their dot plot charts have, like, not that they've gone missing on the internet, but man, they're really hard to find. They're really hard to find because their projections were that by this time in 2025, we'd be in like the threes, not where we're at in the 4 and 4 1/4. So even their like future casting predictions saw us being in a different place, and they conveniently don't bring that up. And so the it's not just these sets of challenges I'm having, the article title, relative to what people want to do, relative to what we've been said and told, or now aren't being said and communicated because they can't go and claim a victory lap on these things.
Yeah.
The soft landing didn't happen. What they did is they took us to a new elevation in the plane, and it stayed there. So this whole landing didn't really occur when it comes to price of goods and services.
Yeah.
And this isn't an eggs conversation or anything like that. But what will happen, and I think is already starting to like take root, is people have forgotten. People have forgotten.
Amnesia.
People have forgotten what things cost in 2019.
Yeah.
People have forgotten what they cost in 2020 or 2021. And they just see, oh, this rise has happened, which is like a rise up, and it's like set now.
Yeah.
Because where we saw a 40% increase in things, they can still take a 10% dip, and they're still way higher than where they were. And so that's why the whole claim of soft landing, that's dead. That's been dead for months.
So incorrect.
And and then the argument that we're going to be in a recession at the same time that there's things that are happening that are going to spur growth locally in our nation and in our local economies, I don't get the argument. And so this is why my general sense here is like, just ignore this. Like, well, you brought it up. You been on your show. Yeah, I brought it on my show so I could tell you guys, ignore this. Ignore that they're going to tell you this and tell you that. You need to make your own decisions, and you need to make your own choices in your market to suit the needs of you and your family.
Yeah,
absolutely.
I don't know who brought that article up. I should definitely do that again.
So here's the thing. I was looking this up when you guys were talking really quick because I wanted to make sure I got this number right. So the housing market experienced 11 consecutive months of declining sales throughout 2022, with December sales reaching an annualized rate of 4.02 million. That's the exact number that we're at right now. Now, that may be one of the reasons for saying that, but we're not on the way down to that. We're on the way up through it.
Yeah.
So you have two different force functions at that same critical juncture of 4.02 million annualized sales. And that is why I feel confident in my rant, if you will, that because we're on the way up through that season and not on our way down into it, I don't know that we're going to end up seeing a recession in 2025.
Yeah.
To me, it sounds, Andy, like all the data that we've been following against all the noise that these, big corporations, news outlets are saying aren't able to, connect, because one of them is coming from a place of feeling and emotion, while the other one is just straight numbers and data of things that have occurred.
It makes you wonder what the incentive is for them to tell the truth or to avoid the truth.
Leads to my next things that I was going to say. Is this done by design? Because now it's looking like, hey, we have this, we got that. And I know that's another rabbit hole that we can go into.
I feel like that's a whole different show.
But that just came in my mind as you were saying that. I was like, well, then is this done by design? Because it often looks like everything is just kind of lining up for the way that they want it to be.
But I'm going to tell you what, guys, it already feels like that with certain people because they do pay attention to these things. One of the things that they're putting on cons when the recession is they're saying stricter lending requirements. Have we not been seeing everything being nitpicked?
Yeah, but it's been like that though for a while. I know you're saying it's getting worse and it's getting more difficult. So I'm not arguing that point. I'm saying, but it's become that way. But there's also there's a fracture point or there's a tension that the banks need to lend money out to make money. So they have to have that happen where they'll lend it out. And again, I'm going to go back to the housing thing. The housing agencies have been given an expectation to let lending happen, figure out how to get inventory in control up and how to get affordability in control. Yeah. So I hear you. I also think that there's an asterisk and we have something else coming that we don't know yet.
Yeah. Well, I've been feeling it in the last month. I've been seeing it more stricter, and I think it's just because of everything that whole uncertainty with the bond market, the tariffs, all that stuff that I really think puts everybody in tense, puts underwriters in scrutiny because now they need to really read everything with a fine-tooth comb. It has to happen. We have to dot all the I's, and it's just something that we're seeing. So this being pointed out, I'm kind of feeling that. The other thing that feels right now with buyers feel like a commodity right now. And it has been, even though we're projected to sell 4.2 million homes this year, it feels like, hey, is a buyer ready? And now because they have more choices, a lot of times it's like, nope, I'm just going to cancel that one. This doesn't feel for me. So a lot of cancellations we're seeing. So some of these things bring up a good point, and it's just going to be because of the whole economic uncertainty. People do read into this. They don't understand data because a lot of us weren't trained to read data. We're just trained to read the headline. Whatever they're posting is true, right? So I feel like a lot of influence of reading these articles and this information or watching the news does influence people.
Right.
And so the best thing to do, and this is a lot of influence on the internet, watch the right people. If people are not providing the data, do not listen to them. Most people don't even know how to read the data, and you have to go to the right sources, you know?
Yeah, if you're going to listen to other people's advice, you're going to get what they have. So if someone's going to listen to you and they bought a house in 2013, they're going to have the outcome that you've had right now too, right? And so someone who sat on the sidelines and had their their butt on their hands and didn't do nothing, well, they're going to have that outcome. So who you listen to is important, and then the accuracy of the information is important, and even for us too. Like sometimes I misquote things or I misstate things. We do our best to go back to the comments and the description and correct whatever because we care about that. But I think it's the demeanor as well. It's the information, but it's also the demeanor of what is happening, because you have to be able to honestly step back and go, well, who's telling me the truth and who's withholding the truth from me? Why are they doing that? And also balancing how important is that for me to make my choice? Yeah. Do I care that CNBC is telling me the truth or lying to me? Do I care that MSNBC or CNN or whoever is telling me the truth? That doesn't change whether I'm trying to go buy a ranch. I'm going to go buy that thing whether they say I should or not.
No, it's very true. For me too, I mean, there's a lot of times that I doubt myself. I'm sure we all do, right? Like, is this even right? And should I do this? Because it you do feel that fear, like Brian mentioned earlier, but if you really look at, and we're so optimistic here. We're very optimistic. We're one of those where we pay attention. The best analogy I can use is, you have the front windshield with the rearview mirror. Once in a while you look at the rearview mirror just to make sure that nobody's going to freaking rear end you or anything like that. But the front windshield represents the future, and that's what we're so focused on. We're so focused on looking forward and being optimistic with this. If I go back to 2008, if I would have just maneuvered differently and I would have had the proper data, I would have kept all my properties. I would have found a better solution to get creative and figured out how to keep that. Yeah. Unfortunately, I didn't understand that information, and therefore, most of my properties were lost. But even with that, now moving forward, I stuck it out and I said, let me just go into more investments. I'm going to continue doing this. If I would have been able to keep those properties that I lost at that time, I would have looked like a freaking superhero right now.
Yeah, I'm going to go with your term. Hindsight is 40/40.
Yeah, exactly. I like that. We got to just go take it to that next level is what it is.
Yeah, my last thoughts on this is that, there's so much information out there you can trust, but always self-verify. And the best answer you get from someone you trust isn't always the right answer you need for your situation. So just take that with a grain of salt and make sure that you're getting your data from, sources or people that are doing what you want to do or are making it happen.
Yeah. So final thing for me on this article is a very famous quote by Wayne Gretzky, which I'm going to say to the best of my ability, which is, skate to where the puck is going, not where it's at. He was the leading scorer in all of NHL history until recently. I think Alex Ovechkin just surpassed his total goal scored in his career. Wow. But I actually used this analogy in a little class I was teaching the other day, and I was like, listen, when it comes to making content and video and conversations, it's got skate to where the puck is going. So where are we at right now in this time? Where's the puck going? And can I get in line with where that's headed? And so I'm saying the same thing here about this recession article. Sort it out, okay? You're going to find a lot of information online that completely conflicts with them saying, should you buy a house in a recession, okay? You're going to see a lot of actual data of the amount of people who have closed homes, and there's more in 24 than there was in 23. Or more, well, no, sorry, not more in 24. There's 25 than there was in 24. Yeah. And that's going to continue because of the pace and the aggressiveness that's happening with people getting prepared, getting seller concessions, getting price reductions in certain places. Look, people are figuring out ways to make it happen, and you're either going to make it happen or you're not. So skate where the puck is going. Fine, that's it.
I have another Wayne Gretzky.
Yeah. What is it?
You miss 100% of the shots you don't take.
That's not Wayne Gretzky. Well, that's Michael Jordan. And that's Kobe. And that's I don't know. Is it Kobe or Michael Jordan?
It might be Wayne Gretzky.
I don't know.
I'm gonna look. Hey, can you look that up, please?
Oh man.
40/40, please.
Live fact check. Hey, Chat GPT. Okay. All right, guys. Favorite part of the show, Brian.
My favorite part of the show, I think honestly it's going to be article number 3.
Wow.
Existing home sales fall to the slowest pace amid 2009. Why? I was right. Thank you. I was right. Wayne Gretzky did say that. Let's go. Anyways, let's go. I'm hyped for that.
Don't argue anymore.
Anyways,
that was great.
That was my favorite part. Let's go.
Hey, Andy's wrong. Favorite part of the show. Memo.
Yeah, no, mine's the report card, you know, since I freaking never did so good in school, bro. Just knowing that I could go to another state and just get an A is really good.
Well, all I had to do was go to
Just
the
go
other
to
state
Iowa.
to get A.
Just go to Iowa and I automatically get an A.
Mom,
All right.
it made sense. California was a F all along.
Yeah, no, I just love it. You know, hey, it's just we have to learn from other states too. You know, if they're functioning and things are working out for them, like pay attention.
Yeah.
You guys, I'm going to you coined a new term on the show today. This is my favorite part of the show. 40-40.
Yeah, buddy.
40-40
You just
vision.
have to take it higher, you know?
2020 vision is not enough. You
No,
need to double
40.
your focus. You need to double your focus and double your intensity to get in real estate and mortgage in 2025. So I'm going with 40-40.
Step it up, man. Step it up. 40,
Double your intensity, double your focus.
That's it.
All right, you guys. I think that's plenty. That's enough. This is gonna have so many sound bites in this show.
is,
You guys, great show. Remember, all you watching, to like the video, subscribe to the channel, turn on notifications so that every time we launch a new episode, you hear about it first. And please, please, please tell the people you know and love and care about Brian and Will and about Mortgage Heroes, because look, we want to help you out. We can help you in 47 states, and we are super excited about what's happening in 2025. And there's a lot more coming, and I believe the future is bright.
Ooh,
PBD,
I like
PBD,
that.
BizDoc, and all the guys. The future is bright.
Even the Angry Patriot. Let's go.
That's right.
Hey,
I
Angry
believe that we can
Hey,
win.
there you go.
I believe that we can win.
Let's go.
All right, guys. Thank you for a great show. We'll see y'all next week. Bye.
Peace.
See ya. If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.